Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Leon Coetzer, CEO of Jubilee Metals. Welcome back, Leon. How's life treating you?
Hi, Phil. No, all good, thank you. Of course, very busy with a lot of things happening in the company, but exciting.
Yeah. Well, obviously, we've seen the recent news from South Africa with the successful upgrade and operational launch of a brownfield processing facility, marking a significant achievement, while a chrome processing partnership targeting a capacity increase of 360,000 tonnes per year for chrome concentrate and 10,000 PGM ounce per annum has been forged. The company is riding the wave of favourable chrome prices and robust market support, with already substantial chrome product trading and further contributions anticipated. In Zambia, Jubilee's copper expansion strategy is progressing ahead of schedule, with equipment assembly scheduled for September 2023 and commissioning set for October. The Rowan upgrade will enable versatile processing of various run-of-mine and waste sources, with an additional 6-year copper run-of-mine supply secured. Encouraging results from refining trials for copper recovery from tailings have sparked the establishment of a bulk semi-commercial pilot facility aimed at confirming scalability and design assumptions. You have emphasized the strategic importance of these developments, underlining the company's resilience in navigating market volatility and its promising growth trajectory across South Africa and Zambia. Sounds like real progress, Leon. Please tell us more.
Thanks, Phil. Yeah, it certainly is. I mean, basically, if you take that mouthful into just 3 key topics, the first, absolutely South Africa, as you've just highlighted. We've told the market that we aim, to achieve 2.1 million tons of product per year. It'll make us one of the biggest in the world chrome producers. And what the announcement really shows is that we're well on track to actually deliver that. The first project is delivered, and it's only 4 months old. It's already producing to target. And if you just take that project as a standalone addition to our current operating profile in South Africa, it means we're adding at today's prices the potential of another $45-50 million of revenue, just that project. We allude to the second one that we are negotiating to conclude. If you throw that into the pile, we're doubling the company's revenue. Just that addition of those 2 projects, adding north of $120 million into the group. Just South Africa is well on track. It's backed by a proven recipe. We do it every day, and we're performing really well. The next part really is Zambia. It's been a frustration for many to see how and when and how will Zambia come together. And we're really glad that the 2 parts which makes up Zambia, both are now progressing really well. The first part is the Southern Copper Refining Strategy, as we called it. That's all about processing run-of-mine, which was regarded previously as waste, weathered rock, oxide, sulfide, mixed material that people thought was too complex. Well, we've solved that problem. The final key component to that process flow to unpack that copper out of that reef is going in as we speak. It opens up a tremendous potential in Zambia to now target this portion of material that the industry has overlooked for so long. A replica of what we're doing in South Africa. Very scalable operation that's going in, and it ultimately then delivers the South at its full capacity. On the back of that, already the industry is taking note, as we allude to the fact that we're already signing 6 years and 4 years and longer terms for this material to come through our facility as we now unlock that value. The second component to Zambia, which is more about historical tailings processing. As we said before, we're speaking about nearly 2.5, nearly 3 billion, not million, but billion tons of waste sitting on surface. But we had to unlock the technical challenge, and that is, how do we extract copper out of these tailings that's been rejected by the current processes? And we had to research over the past 3 years techniques to bring that copper out that's also viable and robust. And that's the results that are coming out of our facility now. The results are so encouraging that, as we said in the announcement, we've jumped immediately to large-scale pilot facility. When we say large-scale, it means it's more than 400-500 tons processing capacities that we are going to construct to make sure that the scalability up to that 25,000 tons, which we set as our target per annum, the engineers can design that facility. So things are finally coming together. rapidly moving forward. We have tremendous support from the authorities in Zambia to deliver this strategy because it unlocks something that's always been lying on surface, not adding value, not adding employment in Zambia. And we finally are at that point where we can now run faster.
So, Leon, having visited both these places, let's deal with South Africa first. Yeah. This new brownfield site is not obviously part of the stuff that we visited, where you had the huge chrome processors, and then obviously the PGM stuff that I'm trying to get people to imagine how big this thing is. It's and it ultimately goes through many processes to come out with just not a small number of ounces, but obviously considering what goes in, a very small amount of platinum group metals. So whereabouts in relation to that processing site is the brownfield site in South Africa?
Yes, so we're basically the first net of targeted area for that expansion we speak of is all within roughly 100 to 150 kilometer radius from what you visited. So the first brownfields, although it's totally been revamped, it might as well be called greenfields. It's been changed to suit and to adapt to our processing approach. Processes, when we say 360,000 tons per annum, you're speaking of in the order of 40 to 50,000 tons going through it every month. That's a very large facility. Of that, a fraction is upgraded into its own waste where the PGMs are contained. And you can roughly see that for every 15 to 20 tons that is being processed, it makes only 1 ounce of PGMs. But for every 100 tons processed, we make nearly 60 tons of chrome product. And that's the beauty of the strategy. PGM prices are down at the moment, yes. Chrome prices are flying. So it's a perfect timing to be expanding into that strong market in chrome at the moment. And it completely absorbs the drop-off in the PGM price.
So the chrome itself then is produced, and whereabouts do you sell that into? What markets are you selling that?
At the moment, that plant, not all of our plants, but that specific plant is mainly sold into the Chinese market. It is exported direct into China. And it's used to make ferrochrome, which of course is a vital ingredient to make stainless steel. Chrome makes stainless steel stainless, and it's a stainless steel demand that's driving the chrome demand.
Sorry, why is there a high demand for stainless steel as we speak?
Well, there's two things that's really coming into the news flow. One is, of course, China's own aspirations. They dominate in the world of stainless steel production. India's just announced their expansion, where they look to increase their stainless steel production rate 5-fold in India. Stainless steel, of course, is used in many uses. Everything that's silver and shiny in your house has got a stainless steel component in it. Stainless steel is vital to the construction industry. It's got a very wide range of use. And if you look at the latest numbers coming out of China, the stainless steel production and demand is remaining quite high compared to a tapering off in other products. And that's the drive. You couple that to the fact that South Africa is often seen as negative news flow. It's got infrastructure challenges, it's got power challenges in South Africa. What that does, though, for a mineral like chrome, where South Africa dominates in the supply of chrome ore into the world, you can't go anywhere else. It means that chrome's price is further supported because of the negative environment in South Africa, because you can't go anywhere else. You have to get the chrome from South Africa. So you've got two factors driving chrome. One is stainless steel demand. The other is the challenge to actually deliver chrome, coupled to the fact that chrome as a metal, which is very poorly understood by many in the London market, because it's not traded on the LME. It's a physically traded metal, chrome. Chrome in South Africa has had the luxury over the past of being mainly open cast ores. It's now being forced to go underground. I mean, you can only mine the shallow ore once. It now has to go underground, so there's a whole new cost structure coming through chrome. And all of that is putting this tremendous upward pressure on the chrome prices being delivered by South Africa. It's why we are placed so strategically. Just to recapture again, remember that Jubilee, through its processing, where we get efficiencies well above the industry. It's why we're processing the reef for even the world's biggest chrome miners. We process their reef because of our efficiencies. So it means that we are able to process or extend the life of those open cast mines by many years because of our efficiencies. And that's why there's this huge drive for expansion of Jubilee and its processing ability into chrome at an opportune time when chrome prices are so high.
And Leon, just give us an idea, at the current chrome prices and the platinum group metal prices, what sort of revenue and hence profitability is this extra site going to add to Jubilee's bottom line?
Yeah, sure. At current chrome prices, you're speaking of, you're selling chrome in the order of, in South African rand term, which you can convert into your dollar term. At the moment, at CIF prices, you're getting nearly $300 a ton, $305, between $295 and $305 a ton of chrome you are producing at the moment. If remember, on top of that, we make our PGMs. That comes out, yes, the PGM basket prices pulled back sharply, as you saw the PGM companies who are singular metal producers, their earnings have plummeted, 60% down, 70% down on their earnings. We have the opposite effect where our revenue is growing at a time when the PGM prices are down, quite counter to the industry that we are often compared to. So when you look at the revenue capability, you are speaking of, if we are producing an extent of 200,000 tons of extra chrome per year, that 200,000 tons of chrome equates to nearly $35 million of revenue coming into the group. Our margins, as we spoke before, are massively increased, because we no longer toll the chrome. It's our material we are processing through our facility. If you add the PGM component, you're running at nearly $50 to $80 a ton profit coming through that facilities. So there's a massive shift in the earnings of the group as chrome starting to stand up onto its own feet, where previously it was regarded as a byproduct of the company. Chrome at the moment far exceeds the PGM earnings potential because of its massive expansion we're going through in the group.
What was chrome trading at, let's say, 12 months ago?
It was hovering down at 210. It's up nearly 35%.
Okay, so that 30-35% is all going to the bottom line, I take it then, because it was profitable at $200.
No, exactly, Kevin. It's a dramatic up, and what you'll see in the chrome prices is the stickiness of the high price, driven by these factors we've discussed.
Yeah. Okay. Great. So, obviously, we visited these places, and yes, they were vast, and we just saw amazing amounts of heat and energy and electricity being pushed into those chrome things to produce the chrome, and then obviously the waste from that is then processed. No exaggeration, but millions of ways to get the platinum group metals out of it. So now let's shift our focus and go to Zambia, and obviously we visited Rowan ourselves. So is the new facility at Rowan where the old one was, but it's just much bigger now? I mean,
quite correct.
You saw it on your right-hand side there.
Yes, quite correct. So if you were to visit the facility now, what you'll see is the Rowan you saw is still there, but the front side, which pre-processes, prepares the material for the chemical extraction, is now vastly larger. What we had to ensure, because we've cracked the nut on the how, is that we are able to process a multitude of feed sources simultaneously. It's exactly instead of being limited to one or two feed sources at the moment, because that's the demand we see heading our way. So that front part, which accepts the ore, reclassifies the ore, separates out physically the high quality from the lower quality material, all of that is enlarged by manyfold in Rowan to address that and to ensure that we can operate through the various seasons in Zambia, from the very dry season to the extreme wet season in Zambia, that we are able to run through those various seasonal changes in Zambia. So there is no comparison to what we are putting down in Zambia, because there is no other facility that has that capability of processing that variety of material, of that complexity, and then recover and produce two products. We produce a copper oxide concentrate, which is refined to metal, and we produce a very high-grade copper sulfide concentrate, which is sold on to the smelters in Zambia and in Asia.
The oxide that you produce, the concentrate, what happens to that after it comes out?
Once you've produced your copper oxide concentrate, it goes to our Sable refinery, where we leach, solvent extract, electrowin, and make a 99.99% pure copper. It's A-grade copper plate we make.
We've seen that ourselves. It's phenomenal to see the plates, the electrolysis.
Yes, yes. It's always nice to see that pure copper come out after the mud and the sand that fed into the front end of the process.
Yeah, and it's, I believe it's very modular in design, the Rowan front end, isn't it? The way that you can kind of like expand it in future and build satellite modularity on there.
Oh, it was fundamental to design, yes. You'll see coming onto our websites, the modules that are being prepared, absolutely yes. It's specifically designed to be power light, to be rapid in construction, so that we are able to modularly not only add to Rowan, but exactly as you say, this offers us the opportunity to take that front-end module and place it into an area where there are a multitude of feed sources, that it can pre-process, pre-upgrade that material before we start the chemical extraction process. And that can be rapidly distributed. In concept, it's similar to South Africa, where our chrome units are distributed, and it pre-concentrates up the PGMs, which are then refined at Inyoni. A very similar concept that is being rolled out in Zambia, yes.
Yeah, so what can shareholders and listeners look forward to, Leon, going forward in terms of, obviously, I know that you announced that there was going to be equipment on site and scheduled to commence, obviously I think it was September, and there was going to be obviously a commissioning in October, but what sort of news can listeners look forward to as you kind of like, implement and bring Rowan online for the extra capacity?
Yeah, sure. Thanks, Phil. So first and foremost is Rowan remains operational at the moment. So we're pumping it as hard as we can. The impact on the operation of Rowan as we then start integrating and construction will only really be felt towards the latter part of September through to October, to try and minimize the effect on our copper production profile, which is already taken into account in the guidance we gave the market. So at the moment, we're running as hard as we can. Going through the latter part of September, we'll bring Rowan down and then bring Rowan back up during the second week of October. So it's roughly about a 4-5 week period where Rowan will be impacted on its throughput. And then it steps up dramatically from there forward as we start producing at full rate 2 of these products. Oxide capacity to produce that concentrate goes up nearly 20% at Rowan just from this first module coming in. And as we then step up, and the key thing the shareholders should see is on the half year to half year is the step up in copper production, even though our guidance was relatively modest at roughly 5,500 tons of copper. Most of that copper you will see stepping up in the latter half, and you then extrapolate that latter half, you'll see we heading to north of 8, 9, 10,000 tons of copper as that effect comes through, which is nice because yet again, copper prices are well supportive at the moment. It's been up and down, but it's hovering constantly around the $8,000 to $8,500. The fundamentals of copper, everybody sees how strong it is. How they're fundamentally the push into copper is there's not a company in this world in mining that's not having or talking about copper at the moment, and we have the luxury, fortunately, that most of the copper we target is lying already on surface, so we don't have to go and dig for it to try and find it.
And how much of this 2% run-of-mine copper is available for you to process, do you think, in Rowan?
There's millions. The first contract we signed is in the order of about 8 million tons of material that's coming through. There's millions of it on offer. You're just one overburden dump, which is in the past where mines mined that type of material and then dumped it. Just one such dump in Zambia is 400 million tons of it on surface. So the extent of the scalability and the modular approach is full referenced, is vast once implemented.
And how do the government see you in that process?
Well, what they see is they expect us to move harder, faster, and bigger. They've seen the potential of what we can do. We're employing nearly 500 people in Zambia already, been there for 3 years. They've seen and they're well up to date. They've also visited our facilities. They're looking at the upgrade of Rowan and the construction of it. They really are keen that we expand faster, and they're willing to support where necessary to get this out, because they see this potential of, in the short term, bringing additional copper online, bringing significant employment into the copper industry, while copper mines have a 5-7 year profile to get going. Here we're speaking of months, not years.
What sort of revenues do you expect from the upgraded Rowan?
So if you just look at what's announced, we gave a profile of more than doubling our copper output in this financial period, taking into account the upgrade of Rowan. So it means that from your copper revenues, if you extrapolate that, you're getting $8,500 ton of copper. So your revenue is going to be north of $55 to $60 million of copper. You add that to what we're doing in chrome, and then we're increasing our revenues by multiple of the group, not by percentages.
So in Zambia, just so people can be clear, you get this run of mine ore, okay, and you basically take it to the point where it becomes a sheet of copper.
Quite correct, yes. And we've done two things of it. The sheet of copper we then do two things with. Some of it, most of it, we export. Some of it we sell to local copper cable manufacturers to make copper cable. But that's roughly about 10 to 15% of our copper, just to show the circular economy where you're able to take waste into copper cable that is bought in Zambia.
So from the point of taking the run of mine all the way through, just like a miner would have cost of mining, how much does it cost you roughly? Obviously, there's going to be economies of scale as you do more and more, but roughly as we speak, how much does it cost you to take in the run of mine or at 2% greater and come out at the other end with sheets of copper?
Sure, not to give all our secrets away while we're negotiating the material, but
okay, sorry.
So we are on a copper per ton basis. Our target, as we told the market, is to produce copper below $5,500 a ton of copper, selling it for $8,500 a ton. That gives you the margin that you operate on your copper. And you're quite right. As you scale, that will drop to the low $4,000 a ton of copper cathode you produce, because scale brings in that fixed cost dilution. At the moment, at our current production rate, that's the target we've told the market is $5,500 a ton of copper produced versus selling it for $8,500.
Okay, and I mean, I've been reading all sorts of stories that the actual physical copper has gone down by X hundred tons in LME, and we are coming to a tightening phase again in terms of copper. What is going to happen to copper? Because it's been the story now for maybe 18 months that copper is going to be disaster in copper markets. There's just not going to be enough of it, and yet the copper price is lower now than it was maybe in a year ago when it was over $4 a pound or whatever it is now, where we're talking about $3.75, or you're talking about $8.5, whereas it was maybe $10,000 per ton, $10,000.
Yes.
What do you perceive is going to happen?
On what we see in the market when we look at our supply demand side, so sometimes copper prices, as there's many things in life, are driven by emotion, not by real fact. But what we see in the copper market where we are operating in is that there is a steady increase in the deficit component. And you see it in the stocks that's on surface of copper, consistently decreasing in copper. So if you take that fundamentals through to pricing, yes, there will be volatility where copper might run up to $10,000 a ton and pull back down to $8,500 to $9,000. But the expectation driven by the fundamentals is that you can expect a steady rise in your copper price, reflected by the fact that there is a stronger demand than what there's an ability to supply the copper. And that's the fundamentals we are seeing coming through. And I think that's the excitement or the interest that so many large companies are currently expressing to get into copper. You've got companies that previously weren't even in mining, large wealth funds, sovereign wealth funds, trying to take positions in copper because they look at the fundamentals over the next 2 years and 5 years, rather than the fluctuation and volatility in the short term of copper. But the pure fundamental, copper demand outstrips copper supply, stocks are dropping, and that has to be reflected in a sustainable increase in the price.
So when we first started covering you about a year or so ago, it was, or just less than a year, the story we were looking at was that the copper was really going to be a very, very significant part of Jubilee Metals going forward.
Yes.
But from what you've said today, I feel that is still the case. But actually, the chrome has stepped up and said, you're not going to have all of the profit that's coming through, because the chrome is going to make a big difference now, partly because of the increase in price, but partly because of the amount that you're going to be producing. Would that be correct?
Yeah, Kevin, I think there's exactly. So if you spot on correct, if you take a year or 2 years back, our strategic next area to conquer was always copper, on the back of the processing success of chrome and PGMs. But that did not take away from the fact that our aspirations were always to fully capitalize on our proven ability, to outperform the market on efficiencies on chrome and PGMs. We would be silly not to fully capitalize that position. All that's happening right now is that, yes, the strategic goal of copper is coming together, but we've hit a market in chrome where our ability to make what was previously regarded as not viable chrome extremely viable has come to fruition. And that gave us the opportunity to expand not in 10s or 20%ers, but to double production. And because we are already so large in chrome production, by doubling chrome production makes us one of the biggest in the world. We've become a significant influencer in chrome production at 2.1 million tons of product, just to visualize moving that to the end clients. You are on the top 3 biggest in the world producer of chrome concentrates. That's where we're stepping up to as a producer in chrome. And it simply is capitalizing on what we've done before. So it's not as sexy as a new strategy in copper, but it sure as hell is brilliantly fundamental when it comes to the company's earnings revenue as we chase a new strategy. And it is times like these where one realizes the strength of having multiple metals that are based from a similar strategy of process excellence to counter this volatility in the market. Our earnings and revenues won't be impacted as significantly as some of these PGM companies who are plummeting in revenues because they have a single market they pursue in these volatile times. We are very fortunate that we have 4 metals. We have copper, cobalt, PGMs, and chrome. Cobalt is in dire straits, but copper is not. PGMs have pulled back sharply with nearly 25% drop in the PGM basket value, but chrome has increased by nearly 35% in value. And that's the beauty of the integrated nature of our process, where PGMs now actually, which is the primary focus, acts as a byproduct to chrome coming through.
So there was something we touched on it earlier on, Leon, about the results from the Northern refining process trials, which obviously you alluded to them being obviously encouraging and exceeding expectations. And we've always said the Jubilee way, the way you go about this. I think it's 3 years of research and development that went into this for low capital intensive solution to produce this high grade copper. And I think you then made a decision to commence with the implementation of a bulk semi-commercial pilot facility, the Luanshya Tailings. So just take us through briefly what that means as well as another source for bringing that online.
Oh, absolutely, Phil, because that really is, when we speak copper Zambia, it's 2 fundamental different entities. One is, as we spoke now, Rowan Sable doing the run of mines and the huge vast run of mine stockpiles lying all over Zambia and the DRC. And then you've got the tailings side. Tailings is material that's been processed before and then discarded. And it's that material that contains specific types of copper that was rejected by the original process. But it needs a new process to get that copper out, because if you were just going to apply the original process, you were just going to strip off some inefficiencies that was in the tailings. You're not going after the copper that was actually rejected. It needed a process, and we put a challenge to our department. One is that we needed a process that could be robust enough to withstand massive fluctuations in prices, massive fluctuations in acid prices, which is the go-to recovery process in copper. Throw acid at the problem and acid leaches everything and copper. Unfortunately, that's not particularly environmentally friendly. And for a company who is, one of the things we do is dramatically clean up the environment as we move through these waste. We couldn't really wave that flag by adding and throwing acid blindly onto these resources. That's the challenge we had, was to come up with that solution that was low in capital, because we wanted to be modular to grow rapidly in that area, because there is so much of this tailings around. And we had to make sure it's robust and environmentally friendly. Those are the 3 components we wanted to tackle. And the outcome of this trial trials, and the trial is an integrated trial. So it includes how do we pick up the material, how do we unscramble the egg into the types of copper, then how do we extract each of those coppers and then refine it. It's those trials that we've been running and now completed to now be able to say, well, if that works, now let's make it larger and make sure that our engineers don't make a calculation error in multiplying by 1,000 times larger, but rather go maybe 200 times larger when you design the final plant. And that's the next step up we're now going up to, is to ensure, let's do it at scale. Scale semi-commercial means that you're making copper that enough to sell from the process, and you are testing both the economics and the engineering part of that process. It'll be deployed very rapidly because so much work's gone into the past 3 years of the design and the testing. So it'll be implemented very rapidly at Luanshya, because Luanshya is very close to our Rowan and Sable. It's easier to have our teams focus there to implement it there. Once done, we design both Luanshya and Kitwe simultaneously for the ultimate solution. So it's not as if Kitwe has to, or the next tailings grouping we've got has to wait now for its pilot facility. This will be done, prove up the results, and from there go to full scale at both of those operations.
So when we were in Zambia last year, and we have already had brief discussions with yourself about maybe visiting again in January or February to just update the market and show everybody what's happening in Rowan and obviously the other parts of Zambia, as well as what's in South Africa. But we were having discussions mainly because when we went to one of the processing points, you were testing some materials from Luanshya, which I think is a Galileo property. So how's that progressing, and is that a likely source of run of mine for you for Rowan?
Luanshya is a classic example of a mining opportunity that is to first mine through the weathered oxide layer to get to the sulfides. It's been the challenge for so many mining projects in Zambia. Our solution at Rowan, the front-end upgrade, is perfectly suited to now process material such as Luanshya. Luanshya would be yet another perfect client to partner with to extract that copper through our processes. And that's the target of what we are going after. We're going after the small and medium miners who have had this challenge. How do they get through this overburden phase to get to their copper sulfides? Now what we are offering the market is that first phase of material is very viable and can be extracted very efficiently.
Before they didn't make any money on that stuff, but now they're going to. That's absolutely what you're saying. It's
been holding back so many development opportunities, and now we can unlock that.
Very good. Well, we look forward to visiting again, maybe early next year, late this year, depending on how all things pan out. But it looks like you've been quiet in terms of what's been happening on the market, the share price. I mean, we picked you as one of our 12 stocks of this year, and if I'd had to pick probably one of the worst performing stocks we picked, it's you. You guys, and I still can't quite believe it, because really nothing fundamentally has changed, only for the positive. So it seems rather strange that where the share price is at this moment in time, but such is life. This is the market as we speak at the minute, but I'm hoping that things start to improve over the next number of weeks and months.
Exactly. I mean, the market can't discount facts as they come through. And that's something that we are trusting on.
Yeah, we've come to a market, I think, where it's no longer forward-looking.
Yes.
Don't ask me why, but it's no longer forward-looking. It's only show us, and then we'll think about it. Fundamentally, when that flips, a lot of these stocks are going to skyrocket, basically, because of they've been moving forward while the share prices have been moving backwards, which is strange.
Podcast. I mean, it's a beautiful comment on that. If there's a beautiful article that was actually done by Bristow from Barry Gold on exactly this topic about the forward-looking versus the backward-looking valuations.
Leon Coetzer, CEO of Jubilee Metals, thanks very much for your time.
Thanks, guys.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.